Okay, so good morning everyone, and welcome to the GCRF AgriFood Africa second round of missions focusing on the specific sessions. My name's Jane Brookman and I lead this programme for the KTM. We're delighted that you can join us today and I hope you'll find the session useful. These sessions, if you remember, were suggested by participants of the first round of virtual missions for the 5-year GCRF AgriFood Africa programme, which aims to drive sustainable management of the food production systems in Africa in a way that alleviates poverty, enhances economic prosperity, and delivers improved well-being. And this morning we're in a session around finance and insurance and how these can interact with those aims. But I just want to run through a few points before we get started. The session is being recorded and it will be available after the meeting on our YouTube channel. So if you do miss anything that you'd like to catch up with, you'll be able to view this again. We will ask our panelists to join in a discussion over the next 30 minutes. And we encourage you to ask questions to those speakers through the chat channel, and we'll do our best to include those in the discussion. And then after that first 30-minute slot, we will have a participatory session where everybody will drop into rooms within the Zoom, and the panelists will join individual rooms, and we hope that everybody can actually go through a series of questions and form a discussion topic to both discuss some of these areas and also to get to know one another and people who share a mutual interest. We have a networking session this afternoon, and we encourage you to use that opportunity through Meeting Mojo and to connect with the members of the GCRF AgriFood Africa community in that way. And we'll post that link to those sessions in the chat, and you'll be able to connect with the others at the end of the day. Apparently you can book appointments with other delegates between 2:30 and 4:30 this afternoon. Obviously, if you have any problems or questions offline, then do please email us at gcrf.agrifood@ktn-uk.org for help. And you can use the Twitter hashtag AgriFoodAfrica during these sessions. Now, I have the 3 panelists on the call with me, and I'm going to actually ask them to introduce themselves and to state their affiliation before we kick off on the discussion. So maybe, Edwin, if we could start with you.
Hi, good morning to you all. My name is Edwin Zukujo. I work as the Executive Director for Social Farm Company Limited. This is an agribusiness venture based in Ghana that brings youth and women together to produce and distribute foods to the vulnerable and marginalized. Thank you.
Thank you, Edwin. Rishi, if you could go next.
Thank you, Jane. Good morning, everyone. My name is Rishi Raithatha. I'm the Insights Manager for the Agri-Tech program at the GSMA, which is the Mobile Industries Trade Association, and I'm based in London.
Thank you. And last, Richard, please.
Good morning. My name is Richard Leftley. I'm the CEO for Microinsure Holdings, which is a specialist intermediary focused on providing low and middle income people with access to insurance across Africa and Asia. We're serving about 65 million customers at the moment.
Okay, well, Richard, maybe I'll take the opportunity to ask you first. I'm going to put this question to all of the panelists, but maybe I could ask for your opinion in the first instance. Investments to improve agriculture have been stated to be a very effective way to reduce poverty. But of course, the question often is, how should those investments be best balanced in terms of where the money comes from? So in terms of government development funds, charitable foundations, and also from commercial supply. And I guess the question around that is that there's always a need for patient capital when you're dealing with agri-food systems. And do you feel that there is any patient capital available in sub-Saharan Africa?
Sure. I think it's a huge question, and I'll try very hard to be succinct. I mean, back in 2004, when we first started working in the kind of agri space as microinsure, the reason that we got involved was because we realized that there were a lot of kind of smallhold farmers who couldn't get access to a loan. They couldn't get access to a microfinance loan because the microfinance bank was worried that if the rains didn't come, if there was some kind of climatic event, then then there'd be a kind of wholesale default across all the smallhold farmers. And the banks and the microfinance organizations were very worried about kind of extending credit to these farmers. And so that was really a catalyst for us to get involved in this sector, because what we realized also was that when a farmer can get a small loan, they can buy inputs for their land in terms of seed and fertilizer, which massively increases. I think we saw a threefold increase in output. And so that has a huge impact on the well-being of the smallholder and their family. So if you start with the smallholder and then follow it up back through the value chain, and you say, are there banks that are willing to lend to these people, and what are the sources of finance that come into those banks? I mean, I think there is evidence, organizations like One Acre Fund, for example, who have been able to leverage, kind of sources of finance and then lend to those farmers, but all too often they're in the minority. So there aren't as many organizations that are willing to lend to the smallhold farmers. And part of this is risk. Part of this is to do with, there not being suitable kind of insurance products, which are then available to kind of mitigate the risk associated with lending to these farmers, because it isn't just the risk of the farmer defaulting. There are other things that are outside of the control of the farmer, which would cause him or her to kind of potentially default on the loan. So and that is why I think that a lot of the financing that's come into this sector has tended to be kind of governmental or kind of soft financing from the donor community because of the risk that's associated with it.
Thanks, Richard. So, Edwin, I'd perhaps come across to you, what your thoughts are, especially in answer maybe to Richard's comments. Don't forget to unmute yourself, Edwin.
Thank you, Jane. A farmer would generally hire finance or insurance to either rent a land or buy a land, to plow a land or prepare a land, or buy livestock, or buy seed, or in a way to protect their livestock or produce from any disaster. That would generally be the purpose for hiring a loan or an insurance service. So the farmer may be only interested in the service, be it the insurance or a loan, irrespective of the source. But the farmer will only get worried based on the rates that this service or this hiring is costing this farmer. So for us as farmers, we are interested in this blend of financial solutions, be it from the governmental sources or grants, blended with commercial loans. Here we are talking about the sense of not just commerce or profit, but in a way, because for us, agribusiness is both commerce and food security. So we are interested in this blended patient capital, or in this sense, an impactful source of capital that is supporting a smallholder farmer to produce food for the community and for the society. So for me, that blending of commerce with impact, or that sense of impact financing, is what a local farmer will be looking forward towards as a source of capital or as a source of insurance. Thank you.
Thank you, Edwin. Rishi, could you maybe move that thought along in terms of Edwin's talking about the blended finance? And, we can see that the government funds are there often and the charitable funds are there, but what can be done, or what maybe should be done, to try and increase the participation of commercial banks in this food supply chain?
Yeah, thanks, Jane. Just wanted to bring it back for a moment. So
Sure.
when we talk about patient capital, we talk about capital that can be invested and recouped over a longer than typical time frame. And this works in particular for impact investors who seek financial gain, but also prioritize social impact as an outcome. And so this is the major issue when you're in scenarios where you have investors that demand 15 to 18% returns. Sectors such as fintech, energy, and logistics are suddenly more attractive than agriculture or agri-tech. And so this is obviously an issue that leads to a lack of investment, of course. But then to answer your question about the...
Sorry, Rishi, but wouldn't you agree that that's also true, not just in Africa, but that's also true in Europe? I think fair to say that there's a sort of a different expectation from the investor base.
Without doubt, but it seems to be, if you look at the numbers of typical deal sizes in sub-Saharan Africa, and we carried out some research in Nigeria last year, we found that there was quite a wide gap between what the typical ticket size would be in Nigeria for agri-tech compared to any other sector. So just to give you an example, at the seed stage, an average ticket size for agri-tech would be around £260,000. Whereas for any other sector, and unfortunately this is blighted by fintech, you're looking at $10 million. So that gives you the scope of difference between different sectors there. So to answer the question about bank lending, again, this is an interesting question which we tried to look at through our work in Nigeria last year. We found that commercial banks are likely to work with well-established and large agribusinesses. And again, you may say to me, this is no surprise like anywhere else in the world. Agriculture in Nigeria, we found that comprises only 3.4% of all bank lending, despite contributing, a quarter to the country's GDP. There is generally a reluctance to lend to agriculture and agri-tech due to the risks that it is thought about as a traditional industry. But at the same time, banks also face regulatory limitations on the nature and duration of loans and the types of risks that they can take on as well. So there's an issue there where if there isn't a sufficient understanding of how agri-tech can improve agriculture, and without reliable data, banks have a limited ability to assess the risk of lending to agri-techs. That's something that we found. The other thing I think is that while some banks may be willing to lend, startups in this sphere, or should we say agribusinesses in this sphere, often avoid bank loans due to interest rates that are quite high. So in Nigeria, we're talking about 30%. Or even collateral demands that are difficult to meet for a typically small or medium enterprise. There are, however, some exceptions to this, and so you'll find in countries like Kenya and Rwanda, there are a number of banks who are focused on lending to the sector. So NCBA is one such bank, both in Kenya and Rwanda, who not only lend to SMEs within agriculture, but also directly to smallholder farmers, as well as KCB, Kenya Commercial Bank, which has a dedicated program for agricultural lending. It's all on their website, actually. But that's basically what we found through our research so far.
Okay, so Richard, maybe if we could come to you, there's a question, building on the same themes really, from Rob Smallfit, who says, if we do have a technology drive in Africa, will we not attract traditional banking as well as impact investors?
So I think, these are some really, really big questions. I mean, I'm not sure that we will. We are heavily involved. My business, I'm involved in insurance. So maybe I'm being a bit of a fraud talking a little bit more about the banking side of things. But insurance, I would argue, is a much harder product to sell than credit or savings. The reality is no one wakes up in the morning wanting to buy insurance. But people do wake up in the morning, understanding that, taking a loan or opening a savings account might be a good idea. So, and we've had to deploy, technology extensively in our operations. We have 65 million customers and a couple of hundred staff. So we are entirely digital. And yet, technology by itself hasn't overcome the fact that people ultimately don't wake up wanting to buy insurance. We still have to sell it. We still have to go out there and convince people. So I think technology, sometimes people look at it as being this kind of magic bullet which will overcome the world's problems. And of course, it's a major part of it. Of course, it's a major part in actually reducing the cost of reaching people. But you know, it's really a threshold. It's a kind of, you need good technology to do it, but you could have a bad product and a bad customer journey combined with great technology, and I can assure you that you will fail. So, you know, you need good technology combined with clever products that make sense to the client, and a frictionless customer journey whereby it's really easy to sign up and use these products. And if you do that, then you will succeed. And arguably technology is just an enabler within that. So I don't think it's the vital component that's missing. I think actually what's missing is that the products and the services that we have available to these farmers just aren't fit necessarily for purpose. They don't really match up with exactly what the farmers want. And that's why we're seeing less take up of financial services by smallholder farmers than we would anticipate.
Thanks for that, Richard. I mean, Edwin, would you like to add your comments on that? So talking about the fit for purpose products sort of links into what you were saying about the sort of interest rates as well, doesn't it? But maybe if you could comment on that. Thank you, Jane. Yes, I mean, technology is good, it's an enabler, and fantastic. Africa smallholder farmers are high on adoption of technology, be it with M-Pesa, what have you. These farmers are interested in technologies that are fit for purpose and will solve or provide solutions to improve profitability, yield, and income. But the question is, the people who are developing or providing technology services many a time do not take the farmer into consideration in developing those solutions. So this mismatch of the service and what the farmer needs is the whole issue to the whole smallholder challenge for Africa and in Ghana in particular. So for me, technology to solve the solution, increase yield, solar-powered irrigation systems for smallholder farmers, that's a fantastic solution. Taking into consideration the smallholder farmer in terms of even procurement of seed, like what Tala is doing in Kenya. Like for instance, in Ghana, tractor that is connecting smallholder farmers to tractor services. These are innovative pieces that are of interest to smallholder farmers. And we need a lot of these technology solutions, but it is not those that are in our solution or are not taking the farmers' need into consideration. So here we a lot more dialoguing between technology providers or experts and the smallholder farmers for them to understand the actual needs of these smallholder farmers in general. Thanks, Edwin. So basically, as you say, we need to make sure that the products that are offered, whether that's in the insurance sector or in finance, are fit for purpose for the end user. I mean, that maybe brings us on to thinking about innovative business models for both finance and insurance, and how, is it possible that changing the maybe more traditional business models to newer ones can help support the growth of agri-food markets? And so maybe ask Rishi to comment on that.
Thanks, Jane. I'm going to reserve judgment on insurance models because I could see Richard smiling there. So I'm going to let him answer that part of the question. I'm happy to talk about business models for finance. So again, I'm going to talk about our research in Nigeria, where we looked at some of the issues plaguing agri-techs there and why they were finding challenges with some of the business models that were being used. So what we found was that you can have either a business-to-business approach or a business-to-consumer approach, but these are only viable models if the solution that they have can resolve well-defined or multiple pain points along the value chain. Trying to solve one thing isn't really going to cut it entirely. You might find yourself resolving one problem, but then there are other problems that you'll probably that you probably need to think about to make your solution, I suppose, more attractive for uptake. And what we found is that the business to consumer model is particularly challenging to implement, especially in sub-Saharan Africa. This comes partly down to low farmer incomes. So if you want to go out there with a solution and get farmers to pay for it from the onset, that's going to be quite challenging, especially because you have to overcome issues such as trust in terms of does the farmer understand this? Do they understand how to use it? Do they understand the value that it brings to them? And looking at financing in particular, if we're talking about a solution that enables credit, then we found that although data monetization does enable farmer data, for example, to be used for credit scoring, and is a potential growing revenue opportunity for agritechs, it does need to be balanced with concerns about consent, privacy, security, and liability. So it goes beyond the simple idea of what is the right business model for me. I think the pricing factor needs to be taken into consideration as well. I'm just going to quickly talk about insurance before I think you should ask Richard this. But what again I found through our research on the index insurance landscape report that we recently published is that you have a number of different approaches in insurance, and the key to all of them is some form of partnership. And I think this is probably Richard's cue to talk about it in more detail.
Thank you. Richard, would you like to comment?
Well, I think so. Insurance for smallholders and for weather insurance has had a really kind of difficult time, frankly. So, I think we all started off on this journey. Well, we started off in 2004, and we spent 10 years trying to create kind of weather insurance, parametric index insurance products for smallholder farmers. And frankly, I think we all got very focused on trying to design the perfect product. So, we started off, using weather stations, and then, moved to installing our own automated weather stations. And then we ended up using satellite information, satellite data. And a lot of the effort was kind of on improving the mechanism, improving the technology that were being used. And we kind of lost sight of the fact that, did the farmer really want to buy this insurance? And I think the answer to that is pretty resoundingly no. So farmers just aren't willing to pay for kind of weather insurance, especially if it's kind of bundled into a loan or into an input or seed, fertilizer, whatever it may be. And I think we've seen time and time again these kind of donor-led programs which were launched. They sign up 10,000 farmers over a 3-year period, and then the donor funding comes to an end, and so does the program. And the reason for that is because the farmers just aren't willing to pay the commercial price of the premiums. And so the only way that these things work is if the government takes it on. So in the case of, say, India, Indian government subsidizes 75% of the premium associated with these products, and lo and behold, the take-up of insurance is pretty high in India, but in every other country, it's really been a failure.
Thanks for that, Richard. So I guess this question from Alec Anderson, if I ask you first, and if it's not the right, you're not the right person, do let me know. But from Alec Anderson, he said, how can moving from a capital sales to services or pay-as-you-use business model be funded to facilitate accessibility to modern high-performance agri-tech solutions? He then talks about the value that's created if the asset funding gap can be bridged. So I don't know whether anybody feels that they can answer that question. So talking about moving maybe from a capital sales to a pay-as-you-go type environment.
Yeah, I could probably have a go. I think what we found where you have a scenario where you want to try and get the end user to pay for it at the very end, I suppose. The initial approach that we've seen is to try and go for a business-to-business approach, where you're selling the service to a business that has a group of farmers who are contracted to supply or are in some sort of arrangement. And I would say that that would be probably what we've seen from the evidence that we've come across through our research. That's the approach that we've seen being taken before trying to pivot into an approach where you try and get the end user to pay.
Thank you, Rishi. Edwin, I can see you nodding. Have you got some comments you'd like to make on that question?
Yes, obviously. So this high capital access acquisition is one that is beyond the reach of the smallholder farmer. So these business models of rent to own or sharing of equipment are models that are quickly advancing in Ghana or in West Africa. So I did mention of tractor that is sharing or pay-as-you-go tractor services, similar to Uber services. I know of rent-to-own equipment purchasing. These are models that are conducive to smallholder farmers that may not necessarily want to own huge assets, but just want the service to be provided to them. So these are models, and even more so of income sharing models, where these services are rendered, and at harvest, a farmer pays part of their income to the service provider. So these are models that are quickly evolving in the smallholder market service in Ghana in particular.
Thank you, Edwin. We have a couple of minutes left now, so I just want to ask if anybody's got any thoughts on the role. We've talked a little bit about the interplay between technology and the finance component. And what's the feeling in terms of technology hubs and incubators in terms of maybe being one way of trying to introduce and encourage technical advances in the agri-food sector? Does anybody have any thoughts on that? Rishi?
This is a brilliant question. We asked ourselves this question when carrying out research in Nigeria, and we found that for agri-techs and agri-businesses looking to use technology, incubators and accelerators make a significant difference in their journey. So we found that they play an important role in preparing small companies or startups for investment, including institutional investment. And there are 4 examples I can think of from Nigeria where a local incubator or accelerator program enabled further investment. So Beat Drone, which provides drone for crop spraying, I beg your pardon, got $5,000 from Passion Incubator and has since managed to raise $100,000 from angel investors and has got venture capital investment that's forthcoming. Crop to Cash, which digitizes the rice value chain, again received $5,000 from the Innovation Fund. A hub entered a competition run by GIZ and FCMB, which is a local bank, and won $100,000, and now they're part of Seed Stars. Thrive Agric, which is a crowdfunding platform for farms and farmers, received $20,000 from Ventures platform and then joined Y Combinator, which has Airbnb, Stripe, and a number of others as part of its alumni, and got $150,000. So, I mean, those are 3 examples, and there's few more as well, actually. So, just to give you an idea that they play an important role where early investment is concerned. They generate confidence in the sector, and they attract additional investors, and they boost the credibility of the investees in front of the wider investment community.
Thanks, Rishi. Anybody else like to finish off with a comment on that? Edwin, I can see you've unmuted.
Yes, the greatest contribution to Ghana's agri-tech ecosystem came from an oil and gas giant in Ghana, Cosmos Energy, that set up Cosmos Innovation Center to train, incubate, and accelerate agri-tech solutions. And that has funded 10 to 20 agri-tech solutions that have transformed Ghana's agribusiness ecosystem. One of the major contributions I think UK can support in this regard is to bring incubators, hubs along fintech and insurance or insurtech areas to West Africa and patiently develop solutions in agri-tech, in insurance, loan service provision of financial inclusive services for farmers or smallholder farmers. I think that would be one of the major areas of contribution for UK to bring that set of skill sets, understanding, expertise to Ghana or West Africa in general in areas of insurance service provision, agri-tech, and in fintech, which is one of the areas that we feel that this kind of collaboration and partnership can bring towards the agribusiness ecosystem in Ghana. Understandably, it's a tough terrain. That is why this expertise would be very relevant. I did mention Cosmos Innovation, what we call it, Center, also is MEXT, that has also helped contribute towards the ecosystem of startups as well as incubation of solutions towards the agribusiness area. So a lot of these technology incubators and accelerators and bridging that gap in bringing the UK expertise to Africa and Ghana in that regard will be very relevant. Thank you.
Thank you, Edwin. Thank you. Richard, would you like to add any final comments?
No, I think we covered the bases. And yeah, thank you for, we should do breakouts. Hello? Yes, I think we should.
Yeah, with that cue from Richard, sorry, I was trying to find my unmute button, Richard. So with that cue from Richard, I'd just like to thank our panelists. And as we say, we will now go into our breakout rooms. We're going to go into 2 breakout rooms. Myself and Carlotta will be in one, and Tim and another colleague will be in the other one, and we will go through some questions. And I'll see you back here in half an hour. Thank you. Well, hello, and thank you for rejoining this main session. We'd just like to thank everyone for taking part in our session this morning, and to let you know that we will be following up on any of the queries that have been raised in the sessions, and if appropriate, we'll also be writing up an article about the discussions. So don't forget that we've got another session this afternoon around the education and training component, which did actually come into our session this afternoon as well. And thank you and goodbye. Thank you. Okay, well, thank you very much, Rishi and Richard. I don't know, is Edwin still on the line or not? No.
No, he dropped off.
He dropped off. Yeah, I don't know, Richard, I thought it was a bit of an odd discussion that we had to a certain extent, but you just don't know who you're going to get in the room, do you? So
I think it's always really difficult on these things, because inevitably people want to make their point partly from a kind of from a marketing perspective, they want to make people aware of what they're doing. So the questions sometimes are quite, not self-centered, sounds a bit the wrong way, but it's
no, focus.
Focused on something which is very specific, as opposed to looking at the bigger picture and trying to work out what's really working and what's not. But I think that's important, because part of the reason that people come along to these things is for that.
Yeah. We'll see. It's an experiment for us. How was your session, Rishi, anyway?
Some good questions. There's a gentleman called Simon Holland. Was that his name?
Yeah, Simon's very good.
Yeah, he was very insightful. So actually, it was quite pleasant. Rather a gentle discussion compared to what you might have endured with virtual.
I was typing to Rishi that I was worried that if Rob could reach out of the screen and kill me, then he would. And I think it was the big kind of handlebar moustache that had me kind of.
Well, luckily, he was very low in the screen, wasn't he? So he'd have to get his arms really up high. Yeah.
But no, look, huge amount of experience, and I think I think it's a really interesting discussion. Look, and also I'm trying not to kind of like oversell. I think I know quite a lot about selling insurance to people. I don't know very much about banking. Is definitely ancillary to that, right? So I know about it because I sit down with people that try and raise money to then on lend to others.
Yeah. But
I haven't been directly involved in that, and I'm sure that there were people that probably came along to the discussion who were hoping for a lot more discussion in that area, and I don't have those experiences to share. So.
No, and I don't think anybody else on the call particularly did either. That was the point, and that's the thing, you don't know until you get there what they were like. Tim, any thoughts and before we go for lunch?
No, thanks everyone for attending. Experiment for us, so we'll some others, we'll learn some things from this and move on. Thank you, everybody.
Yeah, lovely. Thanks ever so much, everyone.
See you later.